Hey everyone, welcome to Breakout Wednesday for the 21st of September 2022. It is currently about 4 p.m. on the West Coast, 6 p.m. on the East Coast. First of all, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, there's a bunch of stuff I want to crap on about today. Obviously, it's been another bit of a brutal week, a few really big down days. And the bear market is obviously still ongoing. Okay, I'm going to get to this a bit more later, but there's some interesting things happening in some huge stocks, which I think this is going to be happening more and more as in the following months, where FedEx, everyone knows FedEx, that's why it's a good example just to quickly talk about. FedEx came out and they slashed their profit guidance, I think, by about 60 to 66%, I think it was. And just a gigantic gap down, from 204 down to 159 or something, massive gap down. And there's obviously, I'm not going to crap on about the interest rate stuff because everyone knows about it, but it is obviously going to show up in profit and loss statements and balance sheets and company books, and it is a real added cost, even though real interest rates might not be as high as historically they have been. And, you have all these people crapping on about how hard it was back in the day because interest rates were 17%, but that's not really the point, right? The point is the speed of the interest rate increases this year, okay? If you look at the long-term interest rate charts, the speed of the increases has been not really seen before in terms of just how quickly it's happened. And that is something that is a different game, because companies obviously plan for certain things, and it's easy to plan. If you're just a mum and dad takes out a new mortgage, it's easy to plan at 2.5% interest, and it's easy to plan for 5% interest rates. But you don't think it's going to get there in 6 months. You think it's going to get there maybe in 4 years, okay? And so obviously it's the speed that changes the game, okay? And so anyway, it's interesting what happened with FedEx, and I think it's going to happen more. We're going to see it happening more and more. And so I got a bunch of cool shit to talk about, but before I get to it, let's just rattle through some of the trades, okay? Because definitely had a loser this week in AAC. Okay, it was an outright fake out. Okay, in, out, okay, took my loss on AAC. This is the game we're in, no way around it, took a loss on that one, okay. Now, another one I took a quick loss on, and I knew it was going to be a loser the second I was in it, okay, because of the order book. And for those who are looking at the order book on EXR, I'm sure you all saw the same. And I managed to get out of this literally about 10 minutes after I got into it, but I did have to take a haircut on it and take a quick loss. But the order book looked horrific, okay? And I don't know why I even took the trade. I just thought, it was like me kind of competing against that order book, and it was completely dumb of me. But anyway, that's life. And I think we all make mistakes. I think with with many stocks, the order book is, I've talked about this so many times, but it's so important to look at, because when you see huge kind of sell orders in just right where you want to buy and above where you want to buy, then it's not always fishing. Sometimes it's not always spoofing. Sometimes it is kind of real, and they're just stacked orders there. You do want to see that order book in your favor and the balance in your favor if you can, okay? And EXR was just skewed completely in the wrong way. I don't know why I took it on. I took a loss on it. That's life, okay? Another one that was no trade, okay, because XRF I was talking about just basing away here. It was just the day I was talking about on the 14th, and I said I wanted it to base a bit longer. I didn't think it was going to do this the next day, but complete fake out. So anyway, XRF no trade, and the only one that's really saved me of late, and I'm still in it, is NEU, okay? And this was this perfect VCP, really great setup, and it just keeps going, okay? And if we just look, like, it hasn't even kind of penetrated its 10 exponential moving average, which is this red line here, and it's trending so nicely. You know, I'm out of half of it, which I talked about last week, but I've got the other half going, and just letting that other half run on this trade is just really pain for some of those losers, okay? It's pain for all of the losers, really. And so it is so important just when you catch when you catch one of the big winners, you gotta, like, you know, the money's made in holding as long as you can when you really think you're onto a winner. There's nothing wrong with dumping things when that's the plan, but if the plan's to, you know, for these stocks with real businesses and, you know, cash flow and stuff, if the plan's to kind of ride them, then you gotta have, you know, the courage to stick to the plan. Okay, so I'm riding my 10 and 20 exponential moving averages on NEU. All right, for the rest of that. Now, just quickly, the bunch of stuff, I might talk a bit longer than I want to than usual this week, but had a friend talk to me this week about how the market reminds me of like 2012, 13, I think it was talking about. You know, I just wanted to get a bit of perspective of what's happening. This is a this is a monthly chart, okay? And let's just whack on our stochastics on this monthly chart, okay? And so here's a monthly chart. Here's, you know, the 2001 to 2002, 2003 market. There was obviously a bull market, okay? It came out of it, had a massive bear market, here, and then had a massive bull market coming out of that bear market, okay? We had our GFC here, all right, which was brutal, a bit like COVID, bit worse. A bit longer too, and went down, bottomed, okay? This bottom line's a 200 the 200 month moving average, okay? And obviously you can see the GFC had got to its 200 exponential moving average on a monthly chart, bounced and boom, okay? COVID got to the 200 exponential on a monthly chart too. We also got to it on this kind of little bear market here in 11, okay, and 12. This is what my mate was referring to, this market reminds him of. But my argument to that is, look what happened after it, okay? And the market does recover in the long term. And for those who are dollar cost averaging into index ETFs and that sort of stuff, then, you know, this is a great opportunity for those long-term investors, okay? This is a hard market to trade. I think to do well in this market as a trader, you need to be very good, okay? And you need to be relentless, and it's, you know, very, very, very selective, okay? Like, you know, only take trades like that NEU one and just, you know, and sit with it. But it is very hard to do that, okay? This is not an easy market where there's winners left, right, and center, okay? But I just want some perspective. Looking at this current correction, for sure this could go further, okay? You know, just looking back in history, you know, you don't need to be a rocket scientist to just have a look at a chart like this. We haven't got to the 150 exponential moving average. All these other ones did, okay? Even this one did. You know, we still can go down a lot from here, you know, not, you know, all the way down to this black line, red line. Who the hell knows? No one knows. But what I'm saying is that maybe it's not over, but I just think that if you've got a long-term time, you know, horizon on this, who cares if you're dollar cost averaging into index ETFs and you can sit it out and wait it out and be an investor, that's okay. But back to the trading stuff, because obviously that's, you know, what I'm mainly about. So let's just get back to that. Now, there are some stocks, you know, if there are some leading stocks out there, it's definitely the solar stocks, okay, when I'm in the United States, coal stocks too, but I just want to quickly talk about some solar stocks. So this is First Solar, FSLR on the NASDAQ, and it's obviously incredibly strong, okay. It's not the only one, and ENPH is another, okay, that's super strong, and I think I've talked about before. And then there's some stocks that are very closely related. They're like cousins to these solar stocks, like Tesla, which is showing real relative strength, and it's just basing here in this beautiful base. And obviously it's pretty related. And then, you know, and then related to that is the lithium stocks, okay? And so even though we're in this brutal bear market, it's clear that there's money flowing into solar stocks, lithium stocks, and related renewable stocks, okay? And, you know, it's also interesting, just as I stumbled across something this week and something I was listening to a reading of of a bunch of very, very well-known investors who have had incredibly successful funds before. This is Chris Sacca, who's obviously is the guy who was in Google, and then he worked with Google. I think it was, I don't know. Anyway, I'm not going to go into his history of Google because I don't actually know it that well. But I do know of the fund he had, and then he kind of retired, I think. Then he came back and he's got this new fund that he raised $350 million to invest in carbon removal startups. I'm not saying that I want to run and shove all my money into bloody carbon removal startups, but I'm saying that people way smarter than me are getting and moving money into this, and it's certainly reflected in the charts in the sense of what's actually happening. Where's money moving into? It's moving into lithium, renewables, Teslas, and all that sort of stuff. Okay, and I find that pretty interesting. And then there is a new ETF on the ASX called TANN, okay? And TANN invests in, it's obviously beta shares solar, and invests in solar stocks. And so if we just quickly look at the main companies that TANN's investing in, First Solar, ENPH, we just talked about, Tesla, just talked about Sunrun, blah, 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 and go through and look at all the others. But pretty much all their charts are looking good. And obviously, even despite this pretty vicious bear market in the indices, we have clear money pouring into certain sectors. Okay, and it's super interesting, and because the real money made in the next bull market, there will be stocks that go up, a couple thousand%, and they're usually the stocks that during the bear market show huge relative strength, i.e. they go up during a bear market, and then when the bull market starts, they just go batshit crazy and go parabolic for a long, long time. Okay, and so I'm open-minded to this tipping its hand that we might have a huge future for a lot of these solar stocks. Okay, and I don't want to invest in all of these, so I'm gonna put some money aside to invest in a solar ETF. This is not investment advice, guys. I think everyone's learned, even the new traders have probably learnt by now, even the ones that started during COVID, that during a bear market, it is brutal and it is very, very, very easy to lose money. Okay, the trick's to hold on to your money until the next bull market starts and then go hard. Okay, anyway, let's move on. The other stuff I want to talk about is just moving completely away from the solar stuff, but it is related in many ways. Obviously, is coal stocks and what they're doing and all that. All right, TER, one of my better trades of earlier this year, is, I talked about this last week, but it's still setting up. It's consolidating there. Okay, it really is in a strong uptrend, and it's just really consolidating, and and if it breaks out of there, it could have another decent leg up. Okay, it's it. If we just look what some of its cousins are doing, NHC new highs today, WHC, and it's just, you look at how high some of these coal stocks have gone and think, shit, how can I really trade a continuation break on one of these after they've gone up so much? But I just encourage you to go back and study history, what happened during the bull market of 02, 03 to right up to the GFC with a lot of the coal stocks. Coal stocks, MacArthur Coal, Gloucester Coal. I think they're all delisted now, but you can probably find their histories somewhere. MacArthur and Gloucester Coal, they went parabolic and trended completely straight up nearly for many, 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 many years. Okay, and so go back, do your own research on that, but they can always go higher when there's fundamentals behind it, and when there's and obviously there is at the moment in coal. A2M, the market's been dumping, and this thing hasn't. It's going to take a lot to convince me to get a long position in A2M. Okay, that needs longer. Another month or two, but I'm definitely watching. NBIX on the NASDAQ is just basing here. Okay, not caring about the market dumps too much. This is a wild kind of stock though, but it is basing. It looks pretty good there, and I'm going to keep an eye on it. And then just for interest's sake, I have this little watch list where I just looking for massive bases, and it doesn't mean I'm going to trade them, but I'm just looking for stocks with huge resistance. And there's just three at the moment that on that list. APM, which I talked about when it was setting up here, then it failed on earnings and came down, and you know, and it's got, this is a relatively new IPO, and it just has massive resistance up here. And so the way I treat something like this is I don't have orders in yet, but I think it's just, I put it in its own watch list, and I just look at it a couple of times a week, and you know, I just think that shit, you know, this is massive resistance up here. If this can one day come up and just falter around that point and give me a little tight pivot point, it can be one of those once in a year trades. And so it's just not a stock that I want to forget about, APM, okay? It might not break that for years, I don't know, but it's like I used to be talking about the, was it UWL? Maybe it's delisted. I think it was UWL, that trade that had this huge base and then went and faltered for like 18 months or 2 years, and came up and tested that old base, and then it was one of the best trades of last year, I think. I can't even remember its code. I'm pretty sure it's UWL. Anyway, moving on. 360 is also base in. Okay, so we talked about this back here when it's forming a high, low, and I like this setup more because it's you know, it's had longer to base here. It's starting to sit on top of its moving averages, and I think it has potential. I would love that now. Like if we zoom in, it's come up, hit it, come down, and it just needs to form a tight right hand side. Okay, you know, they call it a cup and handle for a reason. This is not a cup and handle, but you know, it kind of is if you put a cup here and then it's forming a tight handle. The whole reason, you know, they added that thing from a saucer and put a handle on is because of a tight right hand side. That's the whole point, right? Who cares what it's bloody called? It sounds ridiculous and stupid, and you know, who gives a crap about that, right? The tightening on the right hand side is vital for a big move, and so 360, I'm going to wait and see if it forms that. And the other one is the dreaded AMP, okay, which I talked about like maybe 6 months ago as showing signs of bottoming and putting in a stage 1 base, and it's just got this massive resistance here that just failed again this week, okay. You know, tested it, you know, here, that's 4 times it's failed at about that $1.22 level, okay. And so if now we can just come down, whatever, bounce around, form a tight right hand side, you know, however much of a dodgy crap company people think AMP is, that would be a base that I would just sit back and let rip on a break. That is it for this week. Take care, have a good public holiday tomorrow. Cheers.